Hello and welcome to this week's edition of Energy Updates News powered by Nenco. This morning we saw oil prices hit a new high. To discuss this, I'm joined by energy analyst Emma Pinnock. Emma, can you give us the latest news on the oil market?
Oil prices broke through $124 a barrel this morning. This followed news that Gaddafi's troops had caused a fire at the Syria field in Libya, which is one of Libya's largest oil fields. Now, oil exports and gas exports from Libya have been reduced since the tension began, some say by around 75%. However, fires could cause the oil fields to be permanently destroyed.
Okay, so is this having an effect on the wholesale market?
We have seen gas and power wholesale prices tick up this morning following 3 days of losses, and it would certainly affect longer dated contracts.
Okay, so that's having an effect. Is there anything else causing the price change in the wholesale market?
Well, overall, we've seen gas prices increase by around 13% since the start of March, and power prices have increased by 12%. Some of the factors that have led to this were after the Japanese earthquake, around 13 gigawatts of nuclear was taken offline in Japan. This caused fears that LNG could be diverted from the UK to Japan to help them, with power generation. Also, we've seen Germany have temporarily shut down 7 of their nuclear plants for safety checks. That also has increased demand for oil, coal, carbon, all the other power generation fuels in Europe. And finally, we've seen kind of the violent spread in Bahrain, Yemen and Libya throughout March.
So you said at the beginning there obviously about the fears that LNG would divert to Japan. Has that happened?
So far we haven't seen any impact on our LNG supplies. In fact, we've been having an abundance of supplies recently. It's not to say that it couldn't happen later on in the year, in winter, as Japanese demand increases and the infrastructure can support those extra imports.
Okay, so if we look again at oil, so if we continue on this level, say if we hit the 2008 level, $147 a barrel, is that likely to happen?
We've seen oil kind of increase by $25 a barrel since the start of February, so it's not to say it couldn't happen. In 2008, around 70% of the trades were due to speculation, so we could see that happen. The same fundamentals that existed then are existing now, such as the weaker dollar, the greater global demand. So it could happen, but I don't think we'll see the same impact on the wholesale gas and power prices.
So we shouldn't see the same prices, you don't think?
No. Firstly, we're in a different situation now than we were then. We've got a lot of supply. The power market's oversupplied at the moment. We've got supply margins around 18.5 gigawatts. That's almost half demand. But also the kind of link between the European gas contracts and the oil index, that a lot of that is being renegotiated now.
And we're also now entering a maintenance period. What effect's that going to have?
Well, as we enter summer and demand reduces, we often see a lot of the power plants, gas pipelines, etc., that are taken offline for maintenance before winter. Now, a lot of this will be already priced into the market, but what we saw last summer was very volatile flows, especially from Norway. We've already seen this occur this week, Langled flows, which is one of the major Norwegian pipelines, as their flows have been reduced to about 26 MCM. We'd normally expect above 30, even during summer. So we could, especially if there's any outages which are unplanned or extended, we could see that impact prices and lead to a lot of volatility.
Okay, so as we've discussed, the oil's hit $124 a barrel. We've got this glut of power. There's a maintenance period. Can you speculate as to what you might see in the coming weeks or months?
We probably would expect to see prices soften during summer, as demand is obviously very low. We are quite bearish towards the summer 11 component months at the moment, especially due to the LNG that we've seen coming in. Further out, we're still quite bullish. There's a lot of uncertainty, especially over the oil disruptions, the nuclear across Europe, whether these safety regulations will kind of lead to nuclear shutdown, and there's a lot of other considerations further out.
Okay, thanks very much, Emma. That's all we've got time for this week. We'll see you next time.